Blockchain, a type of distributed ledger technology, is making waves in banking and has prompted a great deal of discussion and experimentation regarding central bank digital currencies in recent years. While questions remain around its scalability, we're excited by the potential for blockchain to transform the future of the payments industry. What will the adoption of this technology mean for banks and fintechs, and how will it benefit corporates and consumers in the years to come? I'm Mike Truter, and this is the future of payments in 100 seconds. At the core of every bank sits a ledger. These ledgers, or core banking systems, maintain a record of every single transaction. Every movement of money is carefully recorded, checked, reconciled, and audited. A blockchain, on the other hand, is a type of distributed ledger enabled by technology. Instead of needing a central authority such as a bank to verify information, it works through a decentralized network that allows multiple parties to maintain the records on the ledger. In essence, you can think of a blockchain as a shared external ledger with the record keeper and auditor roles combined, automated, and enforced by the technology. In fact, it's almost like blockchain was built for banks, which it was. Here's a rundown of our top 4 use cases for blockchain technology in financial services. Number 1, international payments. The impacts of blockchain in this space could be enormous. It can facilitate greater financial inclusion by lowering operation costs, which in turn can be passed on to consumers through more accessible pricing. It could also remove time zone frictions and reduce settlement risk, as blockchains operate 24/7, unlike most centralized real-time gross settlement systems. Number 2, clearing and settlement. To counteract the risk of financial losses, there are many chefs in the kitchen cross-checking each other as part of the existing clearing and settlement processes, including banks, SWIFT, clearinghouses, and central banks, among others. But blockchain allows for atomic settlement, in which the digital assets are exchanged in a single coordinated transaction, simplifying the process, reducing risks, and making many of these parties redundant. Number 3, smart contracts. Digital contracts could be used to execute conditional or programmable payments, shifting funds or executing a particular transaction when a specific digital trigger event occurs. As these actions are automated by software, there's no need for costly intermediaries to monitor and manage the process or ensure execution accuracy. Number 4, KYC and fraud prevention. By creating a digital ledger, banks increase the transparency of all payments while creating a complete historical record that can be analyzed to detect and disrupt financial crime. We've only started to scratch the surface of these use cases, not to mention the myriad of others we just don't have time to cover here. If you would like to explore next generation blockchain settlement services, our team is here to help you understand the alternatives, support you in building your business case and strategy, and then integrate these blockchain-based solutions into your business. Thank you, and stay safe.